Hello, and welcome to Delta Tech's ABSS video series. In May 2023, LHDN announced the implementation of e-invoicing in Malaysia. In this series of videos, we explain what is e-invoicing and how it affects your business. A point to note is that implementation of e-invoicing is mandatory for all individuals and legal entities undertaking commercial activities in Malaysia. Let's first look at the implementation timelines stipulated by LHDN. The initial timeline was for businesses with turnover of 100 million or more to implement e-invoicing from June 2024. Businesses with turnover of 50 million were to implement e-invoicing from January 2025, 25 million in January 2026, and all other businesses from January 2027. LHDN subsequently revised these timelines in October of 2023. Implementation for businesses with 100 million turnover or more has been moved to August 2024. Whereas, the timelines for 50 million and over, as well as 25 million and over, have been combined, and businesses that have turnover in these brackets will be required to implement e-invoicing in January 2025. For businesses with less than 25 million, or in effect all other businesses, are required to implement e-invoicing in July 2025. Regardless of the timelines stipulated by LHDN, businesses can opt in and implement e-invoicing earlier. One of the reasons to opt in earlier would be, if you have a customer who has already implemented e-invoicing, requests that you invoice them through this platform. How is turnover determined? For businesses that are required to have their accounts audited, the turnover will be based on the accounts for financial year ended 2022. If there has been a change in the financial year end, then turnover should be prorated over 12 months. For businesses such as sole proprietors or partnerships, where audited accounts are not required, turnover will be based on tax returns submitted for year of assessment 2022. Keep in mind that for both of these, the turnover is based on accounts or tax returns for 2022. If subsequently in 2023, turnover is higher or lower, it will not apply. New businesses that do not have audited accounts or tax returns for the financial year 2022 will fall in the less than 25 million turnover category. These will need to implement e-invoicing in July 2025. Who is required to implement e-invoicing? Essentially, anyone who engages in commercial activities is required to implement e-invoicing. What types of transactions are affected? E-invoicing covers all revenue-related transactions, including invoices, credit notes, debit notes, and refunds that you pay out to your customer. In addition, invoices for goods and services from overseas suppliers would need to be self-billed. These transactions involve business to business, business to government, as well as business to consumer. What are the penalties and implications of not implementing e-invoicing? For the supplier, failure to implement e-invoicing could result in a fine of between 220,000 ringgit or imprisonment of up to 6 months, or both. From the buyer's point of view, the implication could be that invoices not validated by LHDN may be disallowed for tax purposes. In the next video, we will be looking at the different ways to submit e-invoice, as well as the validation process flow. Do remember to subscribe so you will be notified when we release new updates.